Okay, I think everyone can see my screen now. And you can start the class proper. So we already started talking about settlement estates and trust. So yeah, and we already established the fact that there are three people that is going to be taxed, or that will be taxed under this particular personal income tax. Shh. Yeah, come and sit down. There are three people that will be taxed, right? Can anybody remind me of those three people that will be taxed under this particular personal income tax? Can anyone remind me? Anybody?
Yes, ma'am.
Okay, David.
Okay, we have a beneficiary,
The beneficiaries,
then the trustee,
the trustee,
and the settler.
the settler. Yeah, thank you very much. So we said the beneficiary will be taxed on the amount that they got from what? From the trust or the estate. So if they get any money from there, they will tax the money that was given to them. The trustee will be taxed on the remainder. So when he handles the trust and he has distributed the funds to beneficiaries, if there is any money remaining, the government will tax that remaining money, and that is what the trustee will pay tax on. And the settler would also be taxed on the capital amount that remains in his hand. All right, so now let's continue. Computation of income from settlement, trust, and estate. Now, the word computed income of a settlement, trust, or estate is simply the difference between the total income and the allowable expenses. The total income can come from any source. It could be from business or trade, plus any other, probably rental income, dividend, blah, blah, blah. Any other one, you add it all up, then you remove your allowable expense. We already talked about the allowable expenses right here. Expenses of the trustee or executor. Can somebody remind me who is an executor? Who is an executor?
Executor is just like an administrator, someone that is being entrusted the estate to.
You tried, but no. There's a particular thing that distinguishes a trustee from an executor. What is the difference between the two?
Executor is just like someone that will be the one to execute the particular estate when the owner of the estate die.
And the what he wants to execute is called what? There's a name for it.
Is will.
Will, exactly. The executor is to execute a will. The executor is to execute a will. And the administrator is an executor that is appointed by the court. It is an executor if the deceased person has appointed the person, probably in the will or before he died, that this person will be the one to ensure that my will is what is done. But in case of a trustee, the trustee is just the person in charge of the what? Of a trust. There are two different things, please. So the expenses of these people are allowable expenses. And any fixed annuity paid out of what? Out of the will or trust is also an allowable expenses. So now remember that I said that the trust or the settlement can include an ongoing business. So the income from the business will be considered as part of the income of the estate or trust, and also the expenses, for example, capital allowance, or any other such expenses would also be included in allowable expenses when you want to get your computed income. So now capital allowance. When where an asset of a trade or business, profession or vocation form part of the estate of a deceased person, being asset in respect of which an annual allowance may be claimed in arriving at total income of that individual for the year of assessment in which he died. Capital allowance shall be computed as follows. So if the trade or business that the person has left behind has assets that is capable of enjoying capital allowance, right? So if it have assets, then this is how you are going to compute the capital allowance. Like these are the rules that guide computation of such capital allowance. Number one, no balancing allowance or charge shall be given or made to that individual in respect of assets for that year. So no balancing allowance and no balancing charge. Number two, the estate shall be deemed to have incurred qualifying capital expenditure on acquisition of an asset equal in amount to the residue of the expenditure on the day following the death of that individual. So the estate in itself, which is the property owned by the deceased person, it shall be assumed to have acquired an asset equal to the amount, how can I say this? The amount of expenditure, the residue of expenditure that you spent on the day following the death of the individual that was spent, the expenditure that was spent, like owotoku, when they spend the money, the remaining, should I say asset, the remaining cash, something like that, that you have on the day following the death of that person, it's going to be like an asset that you bought. I'm trying to think of a better way to say this thing, a simpler way to say it. So the residue of the expenditure of on the day, the person died today. Now today is Saturday. So tomorrow, the residue of the expenditure that they have tomorrow is going to be assumed that the residue is like an acquisition of assets, and the cost of the asset will be the residue of that expenditure. I think that does it. I don't know if you understand. So now, in the event of disposal of an asset on or after that day, that is the day that the person died, maybe you sold the asset that day or after the day that the person died, an addition is to be made by way of balancing charge in computing the income of the estate and shall be referenced to the sum of all allowance or deduction made in respect of the asset to the individual and to the estate. So now, if you dispose the assets, you know that, yeah, of course, you're going to get money when you dispose the sales proceed. So the sales proceed, the sales proceed will have when they use the word balancing charge, we are assuming that it is at a profit, right? It's balancing charge and not allowance. So the balancing charge will be added to the income of the estate, and you are still going to consider all the sum of allowance or deduction. Remember that balancing charge have restriction. It should not exceed the total allowance that has been charged on the assets. So you are going to consider the allowance that have been charged either to the person or to the estate itself before you go ahead with the balancing charge. I don't think this will be news to you. We discuss it when we're treating capital allowance. So now losses. Loss are relieved in normal way by deducting them from computed income. Remember, computed income is what? The total income minus the allowable expenses. Where loss was transferred to the estate or trust, it is not an allowable relief and so should be added back. So if the loss was not made by the estate or by the trust itself, and then maybe I don't know how they can transfer loss. Maybe they shall transfer the loss to the estate or the relief or the trust. Sorry, the loss is not an allowable expenses because the loss is not originally for the estate or for the trust. It was transferred to it. So the normal restriction also apply. Note that such losses may arise when the estate settlement or trust engages in a trade, business, or vocation. Of course, there's no other way to incur loss except if you are engaged in a what? In a trade. Okay. Discretionary payments. Discretionary payments, they are fixed amounts payable to direct beneficiary as authorized by a trust deed. So a trustee or executor has no power to make discretionary payment to beneficiary unless it is authorized by the instrument appointing it. So if the trust does not give the trustee the go ahead to make discretionary payments, the trustee cannot just come and say, oh, I think so person should collect so amount. No, it has to be written in the trust or the will that, okay, oh, using your discretion, oh, pay, let's say for example, David, pay David a particular amount in accordance with the profit made from the trade or business every year. So now you have given the trustee or the executor the power to determine the amount to be paid. You did not state a fixed amount. If you had stated a fixed amount, it could have become an annuitant. The person receiving, David in this instance, would become an annuitant. But this particular payment is discretionary. Sorry, you. I did not know that my network went off. I was already. I was even explaining. I did not know that I was connected. I don't know why. I'm trying to share my screen. Please, is my recording still on? I think so. Yeah. Okay. What was the last thing that you guys heard? Because I just kept explaining. I didn't know I was not on the call. Can somebody tell me the last thing that you guys heard? I don't know when you guys stopped hearing me. Can you hear me at all?
Yes, but you are talking about discretionary payments.
Okay. So yeah, I was saying that discretionary payment is not an allowable expenses. It is not an expenses at all. It is an appropriation of income such that when you get your computed income, when you arrive at your computed income, then you deduct discretionary payments to get your what? The um, income deduction, income to the portion. So that's when you get to the format, you understand better. If income that is an infant child of the sector during the last the sector is treated as income of the sector that he or is not married and is regarded as an infant. Right. So because the child is an infant, and of course you know the status of an infant under the law, the income that is going to that infant is going to be treated as the income of the sector. And not the income of the child. So now, for any of our estimates, therefore our estimates, the average paid to a child of the sector does not exceed 100 naira, which of course is impossible. It is 10% and I can't hear anything. Is it my network? Hey guys, can you hear me now? I don't know what's wrong with the network. It keeps logging me out. But can you hear me now? I have to like stop that, sure.
Yes, but it's like
I don't
you're
know whether I should
breaking.
switch to MTN. It keeps logging me out. I don't know. I'm what?
Your line is breaking. Yeah, it was breaking
It's
even
breaking
before
the
you entered.
network. I don't know what is wrong. Oh, sorry. I'll see if I can switch to my MTN. Let me try to get that on MTN. So if it's happening again, we'll switch to MTN. I'm using Blue currently.
MTN is more
So let me share
reliable.
my screen again. I think the recording is still on. In my own side, the Glow is better. That's why. Okay. So I think I was talking about infants, settlement of unmarried children, right? Okay. So we said that if um the if the trust is used for the future benefit of the child, that is the unmarried child, and you want the unmarried child to benefit from the trust in the future, we're going to that benefit as though it has been received today. Treat it as it has been received today. But any child. So what this particular provision is saying is that we the network is very bad. Oh my god. I'm unable to switch to MTN self. Wait. Okay, I was explaining the second one. So now, the should I say trust? Now let's say trust instead of searching it. The trust benefits the settlers' children, right? We know that this is benefits the settlers' children, but it did not talk about which children. It didn't mention any specific child. The person has, let's say, um 5 children, and it says that the church should pay the school fees of what, let's say, 3 children, right? Or maybe because two of them are no longer in school, and or should I say two of them are illegal, something like that. It did not mention which of the 5 children is supposed to enjoy the particular benefits, right? Please, can you guys hear me better now? Hope it is no longer breaking. Can you guys hear me? Is it still breaking?
Yes, yes, I can hear you.
No, it's fine. We can hear
Eh?
you.
All
We
right,
can hear
that's
you
better.
clearly now.
So now,
We can hear you.
yes, we are saying that the trust did not mention any child in particular, but it's telling you that the children will benefit from the trust. We are going to assume, as at that particular time that we are preparing the account, that the benefit is going to accrue to all the children equally, everybody equally, since we don't know who and who at the time when the benefit will come to them, who and who will benefit from the stuff. So then, where any tax becomes chargeable on or is paid by the settler, it shall be entitled, number one, to recover from any trustee or other person to whom the income is payable by virtue. So you can recover the income tax from the trustee. You know that the settler is the owner of the settlement or the trust, right? So he has paid tax, so you can recover the tax from this trustee. Then number two, or okay, then two is for that purpose to require that the relevant tax authority to furnish to the settler a certificate specifying the amount of income in respect of which tax he has paid. And the amount of tax paid, any certificate furnished shall be conclusive evidence. So A is to recover your tax. You have paid the tax. You can recover your tax from the trustee. Number two is that you need a certificate as an evidence. Certificate will be given to you by the tax authority to whom you are paid. If you pay to Osun State Internal Revenue, certificate is to be issued by Osun State Internal Revenue that the settler has paid a tax, and this is the amount of tax that he has paid. That's what we is talking about. Now, where the settler obtains from a trustee or other person a payment in excess of amount he is entitled to recover. That is, let's say, for example, he was told to sell a particular property and they were hoping the property would be sold for around 5 million, but was able to sell the property for what? 6 million. Then an amount equal to the excess shall be paid by him to the trustee or other person. So be paid to the trustee. If you have more than one trustee, you share it between those trustees. If a question arises as to the amount of payment or any apportionment to be made, that question shall be decided by the relevant tax authority, and its decision shall be final, not subject to appeal or review whatsoever by any court of law. So now you guys are fighting over a particular payment. Who is to collect the payment? How, for example, that child settlement that we are talking about, that you want the child to collect money, but you didn't mention which child. I did not start fighting that, it's my child. Oh. Let's say there are two wives. The Yale will say it's my child. The Yahoo will say it's my child. Blah, blah, blah. So it is the relevant tax authority that will help them to settle that dispute. And whatever the tax authority says is final. It is not subject to appeal. You cannot go to the court and say you want to fight the tax authority over the decision that they have made. No, it is not subject to appeal or review by any court of law. So the next thing, in case of any settlement where there are more than one settlor, um paragraph 4 of the schedule shall have effect in relation to each settlor as if he were the only settlor. So when I was computing this, when I was collating this particular material, I was trying to tell what paragraph 4 is. I don't know the paragraph 4 that they are referring to, but what they're trying to say is that if there is more than one settlor, each settlor will be treated as if he or she is the only settlor for the settlement. Then income that originates from a settlor and is placed in a settlement can be treated for the purpose of paragraph 4 as income paid through the settlement for the benefit of the settlor's child. That is, the income is considered as having paid to a child, even though it passes through the settlement. So now the settlor is not paying his child directly. The settlor is paying the child through what? The settlement. Do you get? Even though it's like when you want to, if your daddy want to send you money, you are in school, your daddy want to send you pocket money, instead of him sending it to you directly, give me your account number, he decide to send the money to the settlement or to the trust, then the trust will not pay you. Do you get? That's what this last paragraph is talking about. So now, computation of tax liability payable by beneficiary and trustee. Remember that beneficiary is one of those that will pay tax under this PIT. Trustee is one of the person that will also want to pay tax. So how do we now compute their tax liability? The income of an individual or trustee or an executor from the settlement, trust, or estate of a deceased person made or created in Nigeria, or in the case of settlement or trust administered in Nigeria, shall be in accordance with the provision of the second schedule. The assessable income of the trustee, now we're talking about assessable income, or executor of the estate of a deceased individual or beneficiary of the trust or estate for a year of assessment shall be the income of that person as determined under the following paragraph and will be on preceding year. I think we have established that this PIT is on preceding year basis before, but we are going to be following this process. The income of a settlement or trust shall be deemed to be the income of the settlor or the person creating the trust, as the case may be, if number one, the settlor or the person retains or acquires an immediately exercisable general power of appointment over capital assets of the settlement or trust over the income derived therefrom. So the person has the power over the capital assets that is providing the income for the settlement. So the income of the settlement will also be deemed to be the income of the settlor. Number two, the settlor or the person make use, whether directly or indirectly, by borrowing or any other way, of the part of income arising from the settlement or trust, which means the settlor is still kind of like getting money from the settlement. It did not relinquish it entirely. Now, the settlement or trust is revocable in circumstances whereby settlor or the person or the spouse resumes control over any part of the income or assets comprised in the settlement. So you can revoke the settlement if they take, before they have relinquished the control. Now they want to take over again. That means you can revoke the settlement. Now, a settlement or a trust is not revocable. It's not considered revocable just because the income or the asset return to the settlor or their spouse if a beneficiary dies before them or if a specified uncertain event occur. So they are saying that if the beneficiary of the settlement should die today and the settlor or the wife or husband of the settlor is still alive, the settlement does not automatically become revocable. That is like the just cancel itself. Do you get? So we've been told what can make it revocable when the settlor or the spouse decide to take control of the assets that provide the income. But in case where the beneficiary have died, it is not considered immediately revocable. The income of a settlement or trust, except one created from the estate of the deceased, they are accepting the estate of the deceased now, include the portion of its income that comes from sources in Nigeria, as well as any income brought into or received in Nigeria. So what if they have assets or they have property that is providing income, but the asset or property is not in Nigeria, but the income made from that asset or property is being brought into Nigeria, then that income will also form part of the income of the settlement or trust. I hope you guys understand what I'm telling you. The understanding of this written aspect will help us in solving the questions when we get there. So if you have a question or you don't understand, please let me know. The computed income of each period of 12 months ending on the 31st day of December in each year shall be ascertained using the provision of Part 1 and Part 2 of Peter. So there shall be deducted any expenses of the trustee. We have talked about this before. These are liable expenses of the trustee or any fixed annual payment. If the income include gain from business or trade, you add the income. And if it includes any expenses from this one as well, you deduct it. The computed income for a year of assessment shall be apportioned for the assessment in the following matter. Now, remember that computed income is what? Total income minus allowable expenses. Now, how are you supposed to apportion the computed income? You are reporting your computed income. It's like computed income is like, should I say, I don't want to say acceptable income. I would say, should I say taxable income or let me use partnership as an example. Don't let me use company income tax. For partnership, when we are doing accounts in partnership, we used to get is it share of profit? Share of profits, like the profit that we want to share between partner. So you see this computed income like that share, that is the profit that is available to be shared towards to beneficiaries, something like that. Now, where the terms of the deed of settlement or trust provide that the whole income of settlement or trust, after deducting authorized expenses and fixed annual payments, is to be divided in specific portion among beneficiary entitled from time to time. Like sometimes the will or the trust will specifically tell you how you apportion it. It will tell you that give Lagbaja this particular percentage, give Tamedu this particular percentage, give anybody, whoever left, to tell you specifically. Or by operation of the law on an intestacy, the income of an individual is to be divided in the manner referred to the above paragraph, that is where the person is specific. The income of each beneficiary of any year from the settlement, trust, or estate shall be similarly apportioned share of the computed income. So the income of the beneficiary is the one that they apportion for the computed income. When a trustee or executor out of the income of settlement, trust, or estate in such amount as it seizes from time to time, then number one, the amount of payment to the beneficiary made in the course of the year shall be treated as income of that year, which is accessible to tax in the hand of the beneficiary. What are we saying here? Remember when we discussed professional payment? Am I still on board? I've not been logged out. You guys can see. When we talk about professional payment, which the payment that the you have to that to um okay, so I've explained number one. Number two, out of the remainder of the computed income after deducting aggregate amount of payments made during the year, they shall be apportioned to each beneficiary who has specific proportional interest in the income of settlement as is obtained by applying proportion to that remainder. So after you have removed discretionary payments, the remaining amount, you know, we establish the fact that discretionary payment is not an expenses, it's part of the proportion of income. So after you have gotten computed income, you remove the discretionary payments, the remaining amount, then you are now going to pay to beneficiary that has what proportion. When we are talking about okay, give let's say David 20% of what of the remaining amount. David will collect 20%. Give Adeolu 50%, you know, then you now start giving them like that. Provided that if the aggregate amount exceeds the computed income, the amount of each payment to be treated as income in the hand of beneficiary shall be reduced proportionally so that the aggregate amount reduced does not exceed the computed income. So now, when all the money that you were told to pay the beneficiary is more than what you have on ground, we are going to reduce the money for each beneficiary in accordance to their proportion of income that you gave them. You get use the proportion to also reduce it. Now, any remainder of computed income of the settlement trust of any year after deducting all the amounts you have apportioned to the beneficiary or treated as income in as a beneficiary shall be apportioned to the trustee for assessment in his name as the trustee of the settlement of trust or as executor of the estate. I think we have discussed this before. You know, the trustee that we are taxing, the trustee is the person in charge of the estate, or the executor is the person in charge of the will. The tax that we are charging this person is not in his own name. It is in the name of the trust or the what or the estate of the deceased person that is managing. And the money that we are going to be taxing is the remainder of the computed income after he has paid discretionary payments and all the apportionment of income made to all beneficiaries. So let's say, for example, computed income is 5 million. Then discretionary payment is 1 million. We have 4 million left. All the income apportioned to beneficiary equals to 3.5 million. We have 500,000 left. 500,000 is the remainder of computed income, and that is what is going to be charged in tax. That's what is going to be taxed in the hand of the trustee. Now, significant economic presence, SEP. I don't know why they put SEP in this thing, but let's talk about it, Sha. So this significant economic presence is usually for non-residents. They have put it there, sef. It's for non-resident individual or executor or trustee. That is, if your trustee or executor is a non-resident, how do you I'm looking for, let me explain what significant economic presence is in the first place. So let's take Facebook or Instagram as an example. Facebook and Instagram, are they Nigerian companies? I want us to discuss so that you guys will understand this concept. Is Facebook or Instagram a Nigerian company?
No.
Oh yeah. Time is fast spent. Okay, no, thank you, Bonia. Facebook is not a Nigerian company. Instagram is not a Nigerian company. But are there any income in Nigeria? Are there any income from Nigerian people?
Yes.
Yes,
Of course, there are any income. You get? They are getting money from us, not small money. People are running bastard ads on Instagram and Facebook, and these people are getting money from us. But they are not Nigerian company. They are not even in Nigeria. So will we now be looking at them to be earning money from us without taxing them? That is where significant economic presence comes to play. Though you are not in Nigeria, you might not even have an office in Nigeria. But if your income covers a particular threshold or your business activity covers a particular threshold in Nigeria, we are going to see you as somebody that is earning like a significant money in Nigeria and will tax you accordingly. That's what covers. That's what economic presence covers. Like we're telling you that your presence in our economy is significant and you have to what? You pay tax accordingly. I hope you guys understand as I try to explain. Okay, so now let's go. What constitutes significant economic presence? When we talk about digital transaction, I mean, all these things that we're doing on Facebook and Instagram is still digital transaction, right? So a company other than a Nigeria company shall have SCP in Nigeria in any accounting year where its gross turnover is more than 25 million, or this one is in naira, 25 million naira, or its equivalent in other currency. And also, apart from the fact that it's 25 million naira, any of this would occur to that company. Number one, the company is streaming or downloading digital content, not limited to movies. That is, it could be movie, it could be video, it could be music or game to people in Nigeria. If they are doing this and their income is more than 25 million, then you have SCP, you're supposed to pay tax. Then you transmit data collected about Nigerian users. That is, they are using your maybe your app or something, and you are getting data about Nigerian users. So this data has been generated from user because of the activities on digital interface, including website or mobile application. So you are getting data from Nigerians. Then, of course, you have ASCP in Nigeria. Provision of intermediation services through digital platform or website or online application that link supplier or customers in Nigeria. I think an example for this one would be Temu. Temu is not a Nigerian company, but they are like an intermediation service. I'm very sure all the stuff that they are selling on Temu is not for is the Temu buy everything. Temu is connecting buyers and sellers, right? So a good example for C will be Temu. D, provision of goods or services directly through a digital platform. Then you use Nigerian domain name, that is your website end with NG. You have a purposeful or sustained interaction with people in Nigeria by customizing your digital platform to target people in Nigeria, including pricing your product in Naira. Do you get your products are priced on your website in Naira, or you provide option for payment in Nigerian currency. When you do any of this and your income is above 25 million, then you are guided to have a significant economic presence in Nigeria. Now, the activities carried out by connected person shall be aggregated in determining the 25 million threshold where necessary. Any company or Nigerian company covered under a multilateral agreement to address tax challenges arising from digitalization of economy to Nigeria is a party shall be treated in accordance with that agreement. So the first sentence is saying that a connected person, I don't know if you guys know what a connected person is. Let me relate it to something you can connect. In your FR, we have done group accounts now. We have parent and subsidiary, and we have associates. These people are connected people. Parent is connected to subsidiary is connected to parent, associate is connected to fellow associate, right? So they are connected people, and transaction between them is called the related party transaction. I think there's a standard for it. I just cannot remember the name of the standard. Related party transaction. Anyway, so related party transaction is going to be considered when you want to determine your 25 million threshold, which means even if you sell goods to your parent or your subsidiary, the turnover from that transaction will also be included in your threshold when you're calculating your threshold. That's number. Then the second paragraph is talking about people that are under double taxation arrangement, DTA. That is, your income is taxable in more than one country. Nigeria will tax it, another person will tax it. So we have something called double taxation arrangement, and specifically for companies like that, they don't want to tax you two times. So the countries do not come to agreement that if a particular company fall in our country together, this is what we are going to do to the company. This is the rule that we'll follow. Now, this one is not telling you that if a particular company follow this particular, if they fall into this particular arrangement, you will follow the rule that has been laid down in the multilateral agreement. Do you get? So now let's talk about services now. A company other than a Nigerian company, that is a foreign entity, carrying on a business or trade comprising furnishing of services of technical, professional, management, or consultancy nature, shall have SCP in Nigeria in any accounting year where it earns any income or receive any payment from a person resident in Nigeria. That is, they provide services from a person in Nigeria and the person pays them the money. Number two, you provide service from a fixed base or agent other than a Nigeria company. Do you get? So it's either that they have a fixed base in Nigeria, even though they are not a Nigeria company, they have like a building in Nigeria that they are providing services from, or they provide service from to a person resident in Nigeria and the person paid them money. So if any of these two should happen, you are regarded to have a SCP in Nigeria. So services of technical nature means any service of a specialized nature that are not professional, management, or consultancy service. But it should be noted that a company shall not have SCP in Nigeria in relation to a payment, where the payment is made to an employee of the person making the payment under a contract of employment. So this one is saying that if the payment, we said that if the company receive payment from a person making it, from a person resident in Nigeria, then it constitutes SCP. But they're not negating it that there are some people that will pay to the company, and that payment will not signify significant economic presence. And that's what we are trying to list now. Number one, the employee that they make payment to, or the company made a payment to somebody, an employee, but the payment is for contract of employment. So contract of employment, next contract for employment. Now, number two is for teaching in an educational institution. So if the payment is made to a teacher, so by a foreign fixed base of a Nigerian company, the payment is made by what? The company is a Nigerian company, but it is made by the fixed base, their office in another country. Let's talk about, like, let's say like that. The Nigerian company office in another country. Those one does not signify severe economic presence. Now, in addition to the above, where the executor, the trustee outside Nigeria carry on trade or business that includes all of these consultancy services, to the extent that the individual executor or trustee has SCP in Nigeria. I think we have established that. Now, account of an estate. The account is to be prepared to 31st December every year, that is to be January to December, and to date of final distribution of estates. Sometimes you would have distributed all the estates before December. So if that's the case, you stop on the date of the final distribution of the estates. And the responsibility to prepare the account rests to the trustee or the executor, that the one in charge of preparing the what account. Payment of tax. Income arising from the trust or estate or settlement is assessable in the hand of individual beneficiary. Relevant tax authority is the authority of the state where the beneficiary resides on 1st of January of that year. Note where the instrument does not provide apportionment of net income, or there is an adjusted profit, adjusted income not apportioned. Such income is taxable in the hand of the trustee as agent of the estate. The trustee therefore pays tax out of the fund of the estate. I think we have talked about this before. So these offenses and penalties, you guys have to go and read by yourself. I think it's not plenty, it's like around 6 or 8. It's 6, okay. Please go and read the offenses and penalties by yourself. I want us to solve at least 1 or 2 questions before we end the class. And I want us to end the class by 6:30 so I can prepare to break my fast. We have like 1 hour, so we still have time now. Before we talk about the formats, is there any question? Is there anything you guys don't understand before we continue and talk about formats? I guess that's enough.
Good evening, ma'am.
Good evening.
Sorry, I was not in the class yesterday, so I don't really understand what you mean by settlements. And then my second question is your explanation on the services, something on services, the number 2. I didn't really get that explanation.
Okay. So which one did you say you did not get the explanation? Is it
Your explanation on services,
this one?
just services, yes. Yes.
Okay. So you were not in yesterday's class. You can watch the recording later, but let me just explain what settlement is. Settlement is when a particular person transfers the enjoyment of a property or an estate to another person. So you want somebody else to enjoy the benefit of your property. You do so through a particular instrument, which could be through a trust, or for a dead person, a will. Do you get? That's basically what settlement is. Settlement. So you just want somebody else to enjoy from what you have, and that's what Beth trust. Trustee is the person in charge of ensuring that the things go in accordance to the instruction of the settlor. The settlor is the owner of the settlement. It's the one that wants people to enjoy from his property. I'm trying to make it as simple as it can be, because I know this thing can be very confusing. Okay, so that's basically for settlement. For this particular service, so we are talking about a foreign company now. If a foreign company provides service, no, this service is under SCP, it's under significant economic presence, right? So now, to what extent will a non-Nigerian company provide service, whether technical, professional, management, or consultancy services, to people in Nigeria to form a significant economic presence in Nigeria? So we have two things we have two things that can make them have SCP in Nigeria, that is a foreign company that provides service. Number one is if they receive payments or earn income from any person resident in Nigeria. So the person is resident in Nigeria. I'm sorry, give me a minute. Sorry for that, please. So SCP now. So now we have established the fact that if they receive any payment from somebody in Nigeria and the person is resident in Nigeria, then that payment have made them a significant economic presence in Nigeria and they have to pay tax on that income or that payment. Or if they have a fixed base or an agent in Nigeria, Fixed base means a building, a permanent establishment, that is, they have an office in Nigeria and they earn income or they receive payment from that office, or they have an agent that represents their company in Nigeria and they earn income from that payment from that agent. Economic presence in Nigeria. Do you get it now?
Yes, thank you.
You're welcome. So now for the format. This format is for the trustee. The format that we want to talk about now is for the trustee. But know that whenever I want to do CIT or PIT, you write the name of the person on top. The name that you write on this particular computation is not the trustee's name, though it is the trustee that we want to. I don't know how to explain this thing without sounding redundant. Now let me try to take it one by one. There are three people that you will tax under this PIT. You are taxing the trustee, the beneficiary, and the settlor. Though most of the time, I've not seen a question that asks us to tax the settlor. So I don't know how the settlor taxing works. I don't know. The people that we focus on is the beneficiary and the trustee. The beneficiary is very simple. Income that comes to the beneficiary is what we tax. Now the trustee is the person that is helping the settlor to distribute the enjoyment or the property or the income from the property. It is not as if it is the trustee himself that we are taxing. It is that estate. Remember, estate is the property of a person. It could also be the property of a deceased person. Do you get? It is the estate that we want to tax, not the trustee, please. So it's just the reason why we're only calling it the trustee is because the trustee is the person in charge. So, and it is the trustee that will pay the tax. Do you get? Now, when you want to start computing, it is the owner of the estate, that is the settlor, the estate owner's name that you write, not the trustee's name. Oh. That's why I put it in brackets, and I even put exclamation mark so that you remember very well. It is not the trustee's name that you write, please. It is the estate owner's name that you write there. So then computation of chargeable income for particular year of assessment. Then you have your trading profits. Remember that I said that the estate could include a business, an ongoing business. Even though the owner of the business has died, the business will keep going on. We have the going concern concept, right? Even though the person has died, because the business is a separate legal entity from the owner. And definitely because the owner have died, it does not mean the business will die with it. Okay, so you write the trading profits, that is the profit from the business, then you less capital allowance. Don't forget, we have spoken about capital allowance, but in most questions, you are not going to be required to compute capital allowance. It will be given to you as a figure. They will give it to you like as a figure. Then you have your the net sales, the net profits, or actually I say the net trading profits. Other income, you can get interest income. Maybe the person has the venture, rental income from property, dividend, gross. If given as net, ensure you gross it. Dividend to be added here is the gross dividend. Remember that interest, rent, and dividend are subject to withholding tax. Have we done withholding? I think we have done withholding tax, right? Have we done withholding tax? I don't think it's in your shed. It's in your. Let me check. I don't think it's in your course of plan.
Yes, we have done it.
We have done it.
done.
Yes.
I know I see somebody, but I thought it was advanced tax. Okay. We have done withholding tax and VAT. Okay, we're almost through with our calculation aspect. Wow. Wow. We're almost through. After partnership, have we done taxation of investment income?
No.
No, we've not.
And I've taught professional people. I don't know that I've not taught you guys. I'll have to go and note that. Okay. So taxation of investment income, stamp duty. Stamp duty has no calculation, but I'll teach you guys. Custom and SI duty too, no calculation, but I'll teach you guys. We'll talk about this. I think after those ones, you guys are left to read the rating aspect by yourself. If you have any question or you are confused, then you can come to my DM. But we'll surely talk about stamp duty and custom and excise duty, then investment income. Partnership will do partnership after this particular topic. Then I think that will go for that. Wow. Okay. Now this is me telling you to come to my class. Don't be late. You guys will soon start missing me. Okay. So like I said, interest income, rental income, and dividend income are subjected to withholding tax. So if the amount given you is net, it means that the amount given you as okay, let me say this way. It means that they have removed withholding tax before writing that particular figure for you. That's net. Then what you do is to turn it back to gross by dividing it by what? 90%, because the percentage for these three are 10%, whether for company or for individual, it's 10%. So if they give you net, it means that what the figure you have is 90% of the original figure. So to now turn it back to 100%, you divide it by what? 90%. That's what I mean when I say gross. If given as net, you gross it. How do you gross it? By dividing by 90%. But if they give you as gross, you don't need to do anything to it, or just use the figure like that. Okay? So we can have miscellaneous income too. Then addition of all this trading income less capital allowance and all of this other income is called what? Gross income. Then you less allowable expenses. So the allowable expenses include the trustee's remuneration. Then. So trustee remuneration is divided into two. We have the fixed and the variable remuneration. The fixed is a fixed amount, maybe 20K or 500,000 every year. And the variable one is like a commission. Commission, it could depend. Sometimes it will be on the gross income, which you have above. Sometimes it will be on the computed income, which we have below. Now you ask me that, how can we calculate salary on an income that we have not gotten? Please, guys, you have to listen to me carefully in this place. For variable, let me write it in the comment section so that we're not going to be confused. Variable remuneration of a trustee can be on gross income or computed income. Can be on gross income or computed income. If it's on gross income, it's very simple. 5% of gross income. That's a variable remuneration. It's very simple. But if it is on computed income, that is going to cause a little issue, because as when you calculate the variable remuneration, you have not even gotten your computed income. Remember, computed income is your total income minus what? Your total expenses. And the variable salary that you want to calculate is even part of the expenses that you will need to deduct to get your computed income. So how do you calculate it? So let's say, for example, if the variable trustee remuneration is 3% of the computed income, then you will calculate it by using 3/103 multiplied by computed income. So you guys can copy and paste that in your notes or your laptop or wherever you want to copy it. So now let me explain it. So if you now want to do that variable salary, you leave the space, you write every other expenses, you write it out. Then add it together plus the fixed remuneration. Remove it from this gross income. Whatever you have left, you now do 3/103% of that amount. Why are we doing 3/103 instead of 3/100? Because that 3 that you want to do for the thing in that particular amount, that particular expense is still inside it. You have not removed it. I don't know if you get it, Sha, but that's how it's going to be. So you have to be careful in your question. Your variable remuneration, is it on gross income or on computed income? You have to be careful about that. So then after you get your computed income, you less discretionary payments. Remember, discretionary payment is not an expenses. It is a what? Apportionment of income. So then you less dividend income, gross. You added gross, you will less gross. Why are we lessing dividend income? Can somebody tell me why we are lessing dividend income? Guys, why are we lessing dividend income? Oh yeah.
I think is dividend income not on earned income?
It is on earned income, but that's not why. Adiolu, how far? David. Oh yeah, why are we lessing dividend? You guys have forgotten that dividend is FII. Frank,
Dividend is a cash investment.
the only reason why we added it initially is to know the total income of the settlement or trust. So we cannot tax it. We have to remove it back. You guys should read. When you fail to answer simple questions like this, it breaks my heart. You guys are breaking my heart. Okay, so you less dividend income. Remember, you are lessing gross because you added gross. So now, amount available for distribution is what you get after lessing these two things. Then you less the amount distributed to beneficiary. You get. So when they tell you to give David 20%, you less it. Give Adeolu 10%, you less it. Give Jesse 30%, you less it. Whatever amount that you now have left, it is the accessible income in hands of the trustee. It is on this amount that you now apply the tax band. Do you guys still remember the tax band? I don't put the tax band there. I forgot. I would have put it there. So the tax band is the one that we use for PIT, the last topic that we did. That first 300, next 300, you now apply on this figure to get your total tax liability. Now let's talk about the format for the beneficiary. For the beneficiary now, it's very simple. We have beneficiary A, B, C. Share of distributable income. This one that is here, this amount distributed to beneficiary is the one that you bring here. It's the same figure that you come here. That is share of distributable income. Then if any of them is collecting a fixed annuity, you put it. If any of them is collecting discretionary payment, you put it. So I think that's usually the income that goes to them. Then you add it all up, it will form the accessible income. Then you use your tax band to calculate your tax liability on the income. Please, before we start this example, any question? I'm assuming there's no question. Let's see if we can do 1 or 2 examples. I hope we can do 2. So when next we meet, we can do 1 more, or probably, I don't know, we just start our partnership straight away. Our classes is coming to an end. So let's start. Okay, Mr. Aqua created a trust for his 4 children, Ada, Baruwa, Chidi, and Dafo. The record of the trustee for the year ended 31st December 2024 revealed the following information. We have the profit from trading, interest received, rent received, other income, other relevant information. Therefore, is to get fixed annuity of 35,000 naira per annum. Remuneration of the trustee is 20,000 fixed, 2.5% of computed income. That's for the variable. Allowable expenses of the trustee is 25K. The trustee made discretionary payment to these children. They wrote it there. Capital allowance for the business is this. Half of the net distributable income of settlement is to be shared equally among the beneficiary. Required. Compute the income of the settlement chargeable to tax in the hand of each of the beneficiary. The income of the settlement chargeable to tax. Okay. Compute the amount of undistributed income of the settlement accessible to tax in the hand of the trustee. So, the funniest thing about this question is that you cannot do A without doing B. That's the funniest thing. You cannot do A without doing B because you need to do B to know the amount that you're even giving those people, the beneficiary. So if I were you and I see this exam in the question, I'll see this exam, and this question is the exam, sorry. I'll first leave like half page for A, and I'll do B first, which is what we're going to do here. So let's leave this line, the one up for A, let's do B first. So B, according to the format, what is the name? Like which name would you put on this account? We are computing computation of what? Accessible income for which year of assessment? 2025 year of assessment. It's a PYB, don't forget. So whose name would we put here? What is the name of the Okay, so whose name would we put here? I said that it is the name of the settlor. That is the owner of the trust that will put. Who owns this trust?
Mr. Aqua. Mr. Aqua's name, rather.
Mr. Aqua. So you're putting Mr. Aqua's name because Mr. Aqua owns the trust, okay? So let's put the Naira sign. Naira sign. So the first thing to do was recognize the trading profit. How much is the trading profit? 980,000. Stop that. Okay. That's nice. See what you're making me do. Wait. Any capital allowance on this profit? Is there capital allowance? Yes. Capital allowance. How much is it? So it's going to be equal to minus, because we are deducting. Stop that. 22,000. So then we'll get our net trading profit. Okay. Then what else? We had other income, Abby. Other income, which is, let's check. We have interest on fixed deposits. Interest income. How much is that? 270,000. Then we have rent from property that has been grossed for us. They did not give us net, they gave us gross. Rent income. How much is that? 620,000.
620.
What else? We have other income. Other income. 163,000. Yeah, come and sit down here. Okay. So do you have any other income? I don't think so. I think that's all. That is all the income that we have. So add it all up. Okay. Rameji. Okay. So we have what? What is this one called? Gross income. Don't forget, total income is gross income. Then what do we do with less allowable expenses? Less allowable expenses. So the first expenses that we have here is what? Fixed annuity for Dafford, right? Fixed annuity. How much? 35,000 per annum. Then we have trustees remuneration. Trustees remuneration. So for trustees remuneration, we have fixed. Abby, how much is the fixed? 20,000 per annum. Then we have variable. I told you that for the variable, you have to wait till you do all the expenses to calculate it. If it is on computed income, assuming it is on gross income, we just do 2.5% of what? Of gross income. Yeah, this is the gross income. This is the gross income. So it's not far-fetched, right? But it's on computed income, so we just have to be patient. So now let's check other expenses. We have allowable expenses. Allowable expenses of a trustee, 25,000. So discretionary payment is not an expenses. We have used capital allowance. I think that is all our expenses. Now, to get this, let us come and calculate our new year. Trustee variable. Trustee variable remuneration. Okay. So we have gross income. Gross income is how much? 2011,000. Then we have total expenses. Let me put it in brackets. Without the variable remuneration. Okay. So now total expenses here is going to be equal to this plus this plus this. Let me put it in brackets so we can put minus. Okay. So now let me put the thing here. What do we have? So this is the computed income before we remove the variable income. It is on this figure that we now calculate 2.5 divided by 102.5 multiplied by 1931000. So what do we have now? Equals to 2.5 over 102.5 multiplied by this figure. So this is our what? Variable remuneration. So equals to this. I intentionally did this thing. I intentionally did it here so that people will not ask questions, or people that are not in this class will not start feeling like what are we doing? So these are all the expenses. Then let's add them up.
Sorry, ma, why is it 2.5 over 102.5?
Why is it what? Because
2.5 over 102.5.
inside this money, we still have the variable remuneration inside it. So it's like when you want to do margin and markup, for markup is profit over cost price. For margin is profit over selling price. And inside selling price, we still have the profits. That is why when you want to do margin, it's going to be P over what? Cost price plus P. Look at it in that way. Yeah, we have the variable remuneration over computed income plus the variable remuneration. That is why we have the 2.5 added to the 100% because the money is still there. I don't know if you got my explanation.
Yes, sir.
All right. So this is now our computed income. Abi? So after our computed income, what next? Is there any discretionary payment? Yes. Discretionary payment. So we are giving to Ade. How much are we giving? How much? 30,000 naira.
I did
We are
40,000.
giving to Chidi 20,000 naira. I hope my child nurse is not disturbing you guys too much. Therefore, 15,000 naira. So total discretionary payments is this. We are disturbing us. This is the total discretionary payments. Now let's put this in brackets. So when you now remove this from the computed income, what you have is the distributable what? Income. The distributable, the amount that you can apportionable income, something like that, sha. This is the apportionable income. And now the trust says that half of the net distributable income of the settlement is to be shared equally among the beneficiaries. So let's use the word net distributable income since that's what they use in the question. distributed. What is it? So now, so half of the net distributable income. What is half of this figure? Let's come here. Equals to this figure divided by what? 2. Abi? This is half of the distributable income. Now say that you should distribute it among these beneficiaries equally. So what we now do here is equals to this one divided by how many beneficiaries do we have? 4, Abi? 4. This is the amount that each people will be collecting. Do you understand how I got what I got? So it means that let me copy their name from here so I'll not type again. So it means that Ade will collect this figure, Barua will collect this figure. Sorry, I'm supposed to paste as values. Every one of them will collect this figure. Because that is what the trust has said. This one will be in what? Negative. Then the remaining amount after you have distributed for these people is what you are going to assess to tax in the hand of the trustee. So what we have undistributed income, undistributed income accessible to tax. Guys, do we understand? We are through with B. Do you guys get it? Any question? Any question before we move to A? No question. Okay, let's go and do A. Assuming we have time, I would have given you guys classwork. You guys will do it now. But there is no time. Okay, so let's move to A. And what does A says? Income chargeable to tax in the hand of beneficiary. So it's going to be computation of chargeable income. Chargeable income for beneficiaries. How many beneficiaries do we have? We have 4. We have, let me start from here. Ade, Abi, Baruwa, Chidi, therefore. I'm supposed to put Naira sign. Naira. So the first thing is what? Distributed income. Distributed or apportioned income, sha. How much did we give these people? Let me copy. So that's their distributed income. What else? We have fixed annuity. Therefore, I've got a fixed annuity. Fixed annuity. This one has no. Therefore, got 35,000 fixed annuity. What else serve as an income to these people? Discretionary payments. Discretionary payments, right? So, they got 40,000. I think we have the figure here. I don't have to type it again. These are the discretionary payments. Copy and replace as transpose. Okay. So I think that is all now. So can you see that it's very simple? So this is the amount that you're going to put to tax. Chargeable income for each beneficiary. And that is it, we are true. Can you see how simple it is? So if you see this in exam, can you see that it's bonus question? Is there any question? I would have loved to solve another question, but I don't know. Is 15 minutes enough for us to solve a new question? Is 15 minutes enough? Okay. So any question? Let's quickly do question 2. Let's do question 2. This question 1. Let's do question 2. So that we know that we've done 2 questions. We may or we may not solve another question in the next class. I can't tell. Depends on how far partnership goes. So, guys, any question? Should we move to the next question? Please, ma, show the workings again. Which workings? Hello, excuse me, sir. You are shouting. Which workings? Oh, shh, shh. Tell the lips. Oh yeah, the person that told me to show the workings, I don't know the workings you want me to show, but I've shown the Excel file. Now let's read question 2. Let's quickly do question 2. Hey, hello, you're shouting. Baba Ali Musa is the trustee of a settlement made by late Malam Junaid Diko in favor of his 4 children and grandchildren and others. So the others, yes. So the trust, the beneficiary of the trust, they did not mention all of them. Shut up. Oh, God. Yeah, come. Come. Yeah, come. The beneficiary of the trust in this question, they did not mention all of them. Okay, but we know that the 4 children are beneficiary, the grandchildren are beneficiary, and others. So we don't know who the others are, right? But we shall know that there are other beneficiaries that has not been mentioned by the what? By the question. See that? He submitted the following information to Zamfara State Internal Revenue Service for the assessment purpose for fiscal year of 2024. So we have interest received, dividend, rental income, business profits, miscellaneous income, trustees remuneration fixed is what? 450. Then they put into bracket 2% of gross income. That's for the variable remuneration. I don't know how I skipped it. Fixed annuity to grandchildren. These are the grandchildren. They wrote the grandchildren's name. Then admin expenses, additional information. The trustee made discretionary payments to what? To the beneficiary. I guess not everybody got a discretionary payment, right? So we have all of these. Then each beneficiary is entitled to 1/6 of 2/3 of the distributable income. Then we have capital allowance agreed with that authority is this. Okay. So now let's number 1, compute the accessible income in the hands of the trustee. Number 2, accessible income in the hands of the beneficiary. Guys, please give me 1 minute. Call you.